Good afternoon, everyone. This is Henry Gambell with simplertrading.com, and in tonight's free videos, I wanted to bring you two names that I think you could consider for the potential of buying. Now, of course, with the indexes at lifetime highs, a pullback at any time could come. So with every one of these, I like to just give you a disclaimer. I get it. Buying up here can be a little tough, but is it tougher than being short? I mean, I believe the answer to that is obvious. So with that in mind, I am still focused on the buy side of these markets, and I like trying to do it in situations where I've got several factors that may be beneficial. You guys know from watching these videos that I'm a big fan of things like daily and weekly squeezes. So here we have it all the way from the daily into the 4-day. So that tells me that over the course of the next, I'm going to tell you a couple of months because I don't know the exact timing, but when that squeeze fires, you should have an outsized move to the upside. Look at the signal back in here, right? Showing you where the momentum shifts and then the move that resulted for the stock. So here we have the signal again. All right, that's the foundation of why I'm bringing the trade to you. But then those multiple of factors that can be helpful next is going to be the earnings. So instead of just buying a call where you're pretty much directly dependent upon direction, buying a call in the earnings series will help you out with that rising implied volatility. It's not often that I will buy like Delta 40s or Delta 30 options, but that could be a viable strategy in this situation. I think it probably won't happen before earnings, but on the actual earnings report, the move above 118 up into 120, I don't think is that far-fetched. So that's one place that I'm going to be looking to allocate a bit of cash for myself. And then another that's a little bit off the beaten path for me, and I think this would probably be better as a short put as opposed to a long call, because you can see the perfect area where we've paused, right? You have this big gap down on earnings, and Stitch Fix spends all this time below that level. Then we come up right through here on this earnings, and all is repaired, right? No pun intended, but that takes you pretty much right to where we were. So that's going to be a formidable area, and maybe we don't get right through it. But what I like is we're starting to see the squeeze form. We're holding the 21 EMA on pullbacks, and as long as you can stay above about the 62 handle, I think this at least trades sideways, if not eventually into a pattern that resolves higher. So of the two, I think Starbucks is probably better. I think Stitch Fix is still worth your time, and those should be some constructive patterns to work with, especially if the indexes keep on pushing to new highs. So I hope that's helpful. Best of luck in your trading, and I hope to see you in the options room tomorrow.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me